What is up, freaks? Welcome back to Tales from the Crypt and this week's edition of Rabbit Hole Recap. It's your boy Marty here. After a long week, it's been a long week for me in particular. I got a bout of the stomach flu food poisoning earlier this week. It was pretty terrible. Very unpleasant experience, Matt. Matt was a journeyman this week. Traveled to Canada and back. Made it all the way back to New York for this recording. It's been a long week, Matt.
I actually rush shipped a microphone to Canada, and it cost me $66 into shipping into Bumblefuck, Canada. And then we cut our trip short anyway, so then I put it in my car and drove down here, and now we're recording here anyway.
Well, high time preference move. You know, you'll think about that and adjust accordingly going forward.
I love our freaks. It was worth it.
Yeah.
We're going to use it in the future anyway.
Yeah, we will use it. We're talking about it. We're getting high tech here at Tales from the Crypt. In 2019, that's our motto here. Before we get high tech or jump into the topics of the day, this episode of Rabbit Hole Recap was brought to you by BlockFi. You freaks already know about BlockFi. If you're looking to take out a loan backed by crypto collateral, BlockFi is there for you. They're helping people avoid having to sell their crypto to pay for things like taxes or credit card debt, student loan debt, whatever it may be. As the largest crypto to USD lender in the U.S., they pride themselves on their ability to provide crypto investors with the ability to pay off high-cost debt without having to sell your crypto. To top it off, interest paid on BlockFi loans can be written off. You heard that correctly. Interest paid on BlockFi loans can be written off, reducing your tax burden even further. It's tax season, the government shut down. You may get lucky this year. We don't know, but that option's there in case the government ever opens back up. So go visit blockfi.com/talesfromthecrypt to learn more about using crypto without having to sell. They got that special deal for you, $25 of crypto collateral added to loans below $10,000 and $50 of collateral added to loans above $10,000. Matt, it's been a busy week. We got a lot to talk about. First topic of the week, something I wrote about today.
Date and price.
Date and price. Today is... couldn't tell you, January 10th, I believe. January 10th.
It's January 10th, Marty. We couldn't tell you.
And we're on a different website here. I have Bitcoin.it up right now just to check price. Actually, you know what? We're going to go to Bitstamp. So
Use TradeBlock.
We're back on TradeBlock. We're going to use the TradeBlock index, the XBX index from here on out. It's January 10th, 2019, year of our Lord. The price is $3,633.93. Perfectly divisible by 3 right now. Freaking me out a little bit. And that is on Bitfinex. But yeah, a lot to talk about this week in particular. What we're going to start out with something I wrote in the bent today, the growing theme of deplatforming and having these content creators and social media companies at large that are getting deplatformed. Return to Bitcoin's been a growing theme. One thing I'm worried about is confusion. A lot of these people turning to Bitcoin and quote-unquote crypto for their answers. I hope they get some good advisors out there. It seems like Gab.com in particular has good advisors. They seem to be Bitcoin maximalists and actually just sent out a huge email to 850,000 Gab subscribers enticing them to buy Bitcoin, which is pretty huge. Showing them ways to buy Bitcoin, where to buy Bitcoin, and why it may be important. And their particular framing is instead of Bitcoin as sound money, is Bitcoin as free speech money, which people are taking a like to on crypto Twitter in particular.
So first off, Gab is like a Twitter competitor.
Yes.
And with a free speech focus, it's centralized just like Twitter, but they're very free speech focused, and they have a monetization element that's different than Twitter, where you can pay for premium services, and also the people that pay for premium services can lock certain tweets, and you can certain Gabs
content, whatever it is,
and you can only unlock them if you pay microtransactions to unlock them, and then Gab takes a cut, and then the content creator gets a cut. So when they got deplatformed from the, all the major financial institutions all blocked their payments because there's been all this controversy there, they needed a new payment method. So it's important for them to educate their users how to buy and spend Bitcoin, because otherwise their monetization strategy goes out the window, right? And like there's a use case here now that if you're a Gab user and you want to use the premium services, you have to buy Bitcoin and send it to them.
What do you think about all the haters out there calling Gab out for using or advising users to use centralized services like Cash App or other centralized exchanges?
I think it's the easiest way. The easiest way to buy Bitcoin as an American right now is Cash App. It has more downloads than Venmo. It's a very simple way to onboard. And it's even though Gab was blocked by the same financial institutions, and Cash App recently blocked their founder's account, Andrew Torba, it's a lot less likely that they're going to block all the individual users that use it. It's a large amount of people. You said the mailing list was like 800,000 people or something.
850,000, I believe. Insane.
So we can cross that bridge if it comes to it, but it's Coinbase blocked them, Cash App blocked them, but it's a little bit different because Cash App doesn't even let them sell. So it wasn't like Gab was selling their Bitcoin through Cash App. It's just a way to buy, and it's a lot harder to block all the individual users, and they probably won't do it. There's probably not the will to do it. But if that happens, then we move to the next step. Yeah,
exactly. No, but it's very interesting to see these sort of worlds colliding. We'll use a Seinfeld quote here. There's definitely worlds colliding right now with the niche Bitcoin world and sort of your quote-unquote taboo. I don't consider them taboo, but a lot of people in the mainstream would consider them taboo content creators. Yes, Gab definitely does come with the vitriol of people in the alt-right, and they do have ardent Nazis on the platform. I do not agree with any of them, obviously. But they are bastions of free speech in a time where it's badly needed, I would argue. And I think it will be interesting to see how these people receive Bitcoin, how they approach it, and whether or not we as a Bitcoin quote-unquote community are able to equip them with the knowledge needed in a timely manner.
I mean, it's coming at the same time that platforms like Patreon are also blocking people on the right, in the political spectrum in America, and it's a perfect use case for Bitcoin. It's educating all of these people why Bitcoin exists in the first place. And it just goes with what we've said a lot, where, the governments and the financial institutions they're the best advertisers of Bitcoin. Like when PayPal blocks your account, like it's immediately obvious to you why Bitcoin exists.
Yeah. And so let's talk about the particular framing, Bitcoin as free speech versus maybe Bitcoin as sound money. Do you think that's maybe a more advantageous sort of first push to give somebody into Bitcoin? He's speechless.
I do like that. I do like that phrasing.
Mm-hmm.
It's one of the reasons why I like the censorship resistance phrasing as well, because in America, at least, it makes a lot of sense because we have the Constitution, so free speech is protected. Mm-hmm. And even our courts have said that money is speech and it's protected. That's why we have unlimited anonymous donations to political candidates, Citizens United case.
Yeah, and then beyond that, they've also ruled that code is speech as well, which Bitcoin is arguably software at the end of the day.
Yeah, so it all comes together. It's a confluence, right? So free speech money, that works. It's Bitcoin. Call it what you want to call it. I like that branding. The branding works. I think Gab is doing a great job at promoting it. They have users that have an immediate need for it, and they have an immediate need for it. And it turns out that because Gab is censored on the sell side, that they're actually forced to create this closed loop, which is what we've always wanted for like the longest time. You want the services that accept Bitcoin. The 2013 move was merchants accepting Bitcoin, but they were all cashing out to fiat.
Yeah, they're getting BitPay, Commerce, or whatever, and cashing out the fiat right away or something like that.
The 2018 move is only using merchants that keep their Bitcoin. And Gab is a perfect example of that. Like Gab will pay for their hosting, presumably, and all their web hosting and their employees' salaries and everything directly in Bitcoin, and it'll be a closed loop.
Yeah. No, that's interesting. And that's actually one one thing, actually, this is sort of tangential to that point, but one thing I wanted to touch on in the bend today is that we do have to be cognizant of the different ways in which Bitcoin can be blocked. So in the same issue of the bend today, there are two stories going on in parallel, excuse me. This Gab deplatforming, moving to Bitcoin, but then at the same time, I brought up the headline that Samurai was involved in this weekend, where the Google Play Store made them disable certain functionalities within the Samurai wallet. I believe one of their functionalities that allowed them to shut off the SIM card remotely, some SMS functionalities, and then some stealth mode functionalities that people in, say, Venezuela can really use right now. So beyond just censorship at like a payment processor level and an on-ramp level, there are these app stores where people trying to download apps to utilize Bitcoin, that's also sort of a weak point. So that's also something to be cognizant of as we're building out this infrastructure and this industry, is how can we make it so like a Google Play or an iOS store cannot censor these apps.
I mean, we didn't get the first iPhone Bitcoin wallet wasn't approved until either 2015 or 2016. They were super slow. Originally, they banned all of them, and then so this is just more of that. I feel like.
Well, I don't even say what is more of that. I think it's more specific, more specific to the use case, like specific voices getting deplatformed on certain platforms, like specific use cases of this app are saying, hey, you can offer a Bitcoin wallet, but we don't want to allow you to offer these functionalities. I'm not sure if it was a foul swoop by Google Play. They did this to a lot of apps, and Samurai Wallet has to sort of go through like a side channel and work out their case sort of separately. But it seems like an attack vector to me.
I don't think it's definitely an attack vector. I think it's way more, these walled gardens will always be issues for us to break into. You want more open systems. The thing that's nice about Android is that you can sideload it. You can use an alternative app store. Do a lot of people do that? No. I do that. More people will do it if they have to do it as things get banned. I mean, the big one was Fortnite, which is one of the most famous, one of the most popular games right now. They just skipped the Google App Store. You have to go to Fortnite's website to download it. And why did they do that? Because they don't want to pay Google a 30% cut of the App Store, right? So they're educating all these young people about how to sideload APKs, sideload the application files, and I think that trend will hopefully continue. That's not the case on Apple, though, where it's like a complete. You
have to go through their App Store.
The other thing I would say is, I think people should probably, it was from a privacy point of view and a security point of view, it'd probably be better to download Samurai in the first place from an F-Droid, which is an open source app store for Android, or like directly from their GitHub, in terms of you can inspect the source code of anything that comes in through Google Play Store. So it's kind of a blessing in disguise. And then the second thing is, I'm not sure if it's as sinister as it seems at first glance, because these features are awesome of Samurai, but they're kind of hacky. Does Google want an app locking SIM cards? Do they want them playing with the dialer? So if you put in a code into the phone app, the app opens and stuff. Like those are kind of in the wrong hands. That could be like a spyware type of thing going on, right? Mm-hmm. So I personally am hoping that it just happens to be that they got hit in this sweeping wave to try and make, Google's stuck in this situation where Apple's app store is a lot safer because it has a lot more restrictions. And Google has always been open, way more open, probably a lot because they're more inept in terms of the moderation there. But you have a lot of apps that are, like the flashlight app that steals all your contacts and stuff, right? So they're probably trying to clean that up, and Samurai got hit in the crossfire, would be my guess.
Yeah, that makes a lot of sense. That's what I was trying to allude to earlier. It was like a foul swoop action. That makes sense.
They're definitely an attack vector. They're a central point of failure. They could censor us, and you want stuff like the Prism phone and stuff that are more open.
Yeah, and this led to a conversation between you and I in Telegram today, just a personal DM, or like my biggest worry for Bitcoin's long-term adoption and mass adoption is apathy. And for mass adoption and for it to be as robust and strong as possible, I'd argue that we need people to start worrying and care about using services like F-Droid, like we just described, and these decentralized services, and staying away from centralized services to a certain extent for certain apps, particularly in and around Bitcoin. So that's what so we just wanted to bring that up. Like, so that's my biggest fear in the long term is just apathy. People just do not feel the need to make these changes.
Right, and we said the negative example that would make you really worried would be the Snowden leaks, because we had the Snowden leaks, and meanwhile most people, they were massive info dumps where we found out all this spying was going on. Most people haven't switched to encrypted messengers. People are installing wiretaps in their homes with Amazon Alexas and Google Homes and
Nest. Now they have cameras too. And
yeah,
stuff
like
that.
People are apathetic by design. Like we were talking about the voting percentages. 70% of people in America don't vote in every election. Like if you counted that, then no one would win.
Right.
People are just naturally apathetic. But then the opposite example is like in Venezuela. Like Venezuelans aren't apathetic anymore because they have no choice.
Right.
Their livelihood's at risk. So you need something like a really severe event, not just a Snowden leak. It needs to be things that actually risk people's livelihood, and then hopefully that'll be enough to make them, realize what's important, realize their privacy is important, realize their sovereignty is important.
Yeah. Do you think it has to get like that's what like sort of bummed me out this afternoon. I was like, does it have to get to a point where there's like a paradigm shifting world event that makes people like shook to their core, where they're like, holy shit, I should rethink the way I'm operating completely. I would hope it doesn't have to get to that point, but it does. Like I said, apathy's my biggest worry, and just like seems up to this point it may like these hard events may need to happen to force people to change their mind.
I think you can get like gradual improvements without it, but the majority will never. If you're comfortable, you get complacent, right? Like if your life is like pretty good and you don't get worried about these things, you're not actually going to try and change anything.
Yeah.
But I mean, it should be interesting to watch play out here.
Yeah. We'll see. We'll see the yellow vest. We'll see if the reported potential bank run that they're going to try to do on Saturday comes to fruition, and we'll see what type of chaos, if any, that incites in France in particular.
Yeah, I mean, France is known. They always protest. They're really good at protesting.
Yeah, really good.
So I would say, like, as a people, they're probably less apathetic, right? But the same thing with the yellow vests, right? Like, they had to get pushed to the limit, right? Like, most of those people have no money. Their livelihood is completely at risk, and they have no other option, right? So that's the situation where you actually get change. We talk about it specifically in the Bitcoin world, right? Like, no one is going to stop investing in altcoins and specifically like really, really bad altcoins and tokens and stuff in a bull market because the money's going crazy, right? But when their livelihood's put at risk, when they lose 90% of their value, 98% of their value, like then they start changing their mind, right? All of a sudden you have all these people that were ardent multi-coiners that, sound like your normal Bitcoin maximalists.
Yeah. No, that's a very good point. That's a very good analogy. I like that, actually. Moving on, though. I guess, yeah, let's start 10 years. Today's a 10-year anniversary of Hal Finney's running Bitcoin. The GOAT Bitcoin tweet.
R.I.P.
R.I.P. Hal. I can't wait to unfreeze your ass, bro.
It's our 10th birthday for Bitcoin this year.
Yeah. That's one thing I think we have to come to consensus moving forward. When do we celebrate? 31st? October 31st, January 3rd, or January 9th.
Just celebrate them all.
Yeah. I had fun. Fun celebration. We had fun last week. Thank you, freaks, for coming out last week, by the way. Any of you guys that made it to Rise, New York here in the city. It was a great time.
Yeah, we threw our own Bitcoin birthday. That was a lot of fun.
It was. So shout out Hal, true pioneer in the space. If you freaks have not gone to bitcointalk.org or the early cryptography email mailing list and read Hale's work, definitely go do that. Highly recommended. He was putting out FUD years before anybody was even thinking about it in today's world.
As in he was disproving the FUD.
Yes. Putting out FUD fires.
Hal wasn't FUDing Bitcoin 10 years ago. He was doing the exact opposite.
Yeah, he was destroying FUD before it even came up.
And famously, he's the number 2 Bitcoin user after Satoshi.
First person to receive a Bitcoin transaction outside of a Coinbase reward.
Bang, bang.
Yeah. Yeah. So shout out Hal. Next Zap. Looks like Jack Mahler. I think it's tonight. Is it tonight?
Did you read that thread?
Yeah, I did.
Badass.
I think it might be tonight. Is it tonight or Saturday?
I wouldn't be surprised if it's tonight because it's the 10th, right?
Yeah. Tonight, yeah. So tonight in Chicago, our good friend Jack Mahler's. Shout out Jack. He was on Tales from the Crypt interview series. Go check that out.
One of your best episodes.
Oh, thank you. Jack led that episode. Tonight he is debuting a proof of sale system at a bar in Chicago.
Point of sale.
Point of sale. What did I say? Proof of sale?
It's like proof of stake mixed with point of sale.
Point of sale. Point of sale system. Completely driven by Bitcoin. I believe it has a node running in it. And
completely driven by Lightning.
Lightning and Bitcoin, yeah.
Right, yeah.
So he teased the UX on Twitter. Looks very sleek, very cool.
I guess it runs on like an iPad that the waitress walks around, the bartender walks around with.
Yeah.
They just click the button for whatever you order. It's just really seamless. They have no control of the bar owner has control of the keys, but the actual waitress or bartender can't spend any of the funds or anything. Their unit is just receive only.
Yeah, they can only make invoices. No, it's a proven. I don't even want to say prototype. It's a proven app at this point that this can work. I don't think the restaurant is only accepting Bitcoin and Lightning transactions, but it will be available, and the UX seemed pretty impeccable.
I mean, it's a test run, and the idea is that the way he has it set up is it's super easy for these places to implement. So that's, part of the beauty of it is that you can just test it for, a night. Like, there's no way you can, test a credit card system for a night. That takes a major investment in contracts and stuff.
Right. Yeah, for just shits and gigs if you want to see if it may be worthwhile. The software is going to be out there. I believe there's a hardware component as well.
Isn't it, I think it just runs on, iPad, right?
But I think he said they have a node set up at each location.
Cool.
Yeah.
We'll link to the thread.
Yeah, we will in the show notes. So check that out.
And just to add on top, I feel like bars are a natural adoption point for Bitcoin because bars in general like cash. They like cash way more than they like credit cards. Credit cards are like a whole mess for them.
That and it's a good conversation starter at a bar,
Exactly.
It's a lot. I gave a lot of Bitcoin out of bars back in the day. I was giving a lot of people $5 worth of Bitcoin at bars back in the day.
It's that alcohol effect.
Yeah.
And they all lost it.
Not all of them. I have friends hit me up. Be like, dude, that $5 is worth a good amount now. I owe you dinner.
Yeah, I had both ways. I had people hit me up during the run in 2017. They were like, I just have no idea where that wallet is. I kind of vaguely remember you shilling it to me and sending me some. And it's gone for good.
Don't do that as often anymore. I should get back to doing that. Or not.
No, it's always good. I think it's a good way. The easiest way for someone to learn is to send them $5 and be like, figure out how to spend that.
Yeah, that is true. Yeah, so speaking of exchanges and giving people Bitcoin Gemini, we spoke about BitMEX's publicity stunt in the Times of London last week when we last met. Since then, Gemini has come out with a huge on-the-ground campaign here in New York City in particular. Crypto needs rules. Matt, what are your thoughts?
Revolutions need rules.
Revolutions need rules.
There's never been a revolution that had rules before. It just seems really out of touch. I don't really, the crypto word I hate that word too. So that being front and center kind of bothers me. I did see two good takes on Twitter about it. The one is that they knew it would brew controversy in the Bitcoin community, so we gave it a ton of publicity on Twitter. We're giving it publicity right now on the podcast.
I actually think Zach Prince pointed this out from BlockFi, sponsor of the show, CEO of BlockFi called that out. He said he was on the subway and was taking pictures. He's like, I know everybody's shitting on it, but everybody's talking about it. Like everybody on the subway that he was on, he said was talking about it.
Yeah, exactly. So controversy is publicity nonetheless. And then the second thing is, the Winklevoss twins own Gemini, and their play this whole time has been the ETF. And the reason they created Gemini in the first place was because the ETF stalled, and they needed one of the main reasons why the ETF kept getting disapproved was because how do you price it? Like, how do you decide what the Bitcoin price is at any given time? And is that a proper price? Is that really what Bitcoin's worth? So they were like, we'll create a whole exchange so that the market on our exchange can then set the price. Remember, they had the WinkDex first, which like combined multiple different exchanges, and then the feds were like, no, that's not enough. So then they were like, we'll build our own exchange. So this could kind of be a nod to the regulators because they know they're watching, right? Like, look, we're going so hard on regulatory compliance that we're willing to do this huge ad spend saying as much, right?
Yeah. They bought a fucking bus and drove it around the city.
Was that their bus, or that wasn't like a commuter bus or anything, right?
It might have been. I don't know. I'm not positive. I would imagine.
I figured they just, did one of those silk screened ad runs on buses because you see those sometimes.
Yeah, no, I mean, the picture I saw, it looked like the whole bus was plastered with the ad campaign.
It looked like it was almost painted, right?
Yeah,
I saw that one
yeah.
too. It was like a blacked out bus.
Looked like they took it to Pimp My Rides to get pimped up with some ad campaign.
Just driving around, throwing Satoshis to people right out the window.
Wait, first give me your name. I'll throw you a Satoshi.
Just follow this KYC approval procedure, and then I'll give you $5.
Yeah, and then going on from there, I wrote about it yesterday. There's a lot of great content in Bitcoin in particular. Crypto Twitter has been a vapid wasteland of vitriol recently, but I've been able to wade through the bullshit. There was some signal through the noise this week, and one of them in particular was Coinmetrics piece. They broke down the Coinbase input data, all the historical Coinbase data in the Bitcoin blockchain to sort of decipher the breakdown of pools that have one Bitcoin over time, and it proved that. I mean, if we have to assume that the Bitcoin mining pools are writing these Coinbase messages and not trying to deceive people, but it seems as if Bitcoin mining pools in particular are viciously competitive.
So just to be clear here, you're not talking about the exchange run by Brian Armstrong.
No. So there's in Bitcoin, whenever a block is created, the miner that mines the block can there's a Coinbase output, and they can input a message into that Coinbase, and that will get transmitted to the network.
Right, and that's where Coinbase took their name from, which is extremely confusing, just like how blockchain.info took blockchain.
Yes.
And now they have blockchain.com, which is annoying. So basically a miner can voluntarily say, I mined this block, and that's how we know.
They can say whatever. Satoshi used the Coinbase to write the Times of London banks on the second, or chancellor on the second ballots of the bank. Right.
So, but it's a user input, so they can put whatever they want there. And historically, they put, we mine this, and it's like kind of like advertising, but also it's like a voluntary thing for the network. So you have to keep in mind, like they could even
write somebody else's name.
Yeah, they could put a different pool, or one of the things he noticed is the unknown amount went up. So the amount of miners that aren't listing anything in the Coinbase has gone up tremendously. I think it's like 25% now or something like that.
Yeah, and another good point that was brought up in the Coinmetrics piece is that the friendliness of miners more recently to sort of announce which blocks they mine, the pools in particular, may have been because of last year's fork wars and sort of the signaling around that. And that was sort of important at that time to sort of gauge interest of the pools in particular and what they were thinking. So that may not be the norm going forward. It may just be during these times of strife when we're trying to figure out what to do and there's not consensus around how we're going to proceed. Maybe that's when miners become more vocal.
Yeah, I mean, I think the key here is you should take it all with a grain of salt. I mean, if I was a miner, I would just be fucking around all day, just like switching which pool I am and going, I'm unknown, now I'm Bitmain, let's just go all over the place.
Right.
But yeah, so just take it with a grain of salt. But Bitcoin mining pools are more distributed than they've ever been. Bitcoin mining is more distributed than they've ever been. And hopefully, if Better Hash comes to fruition, like the actual power of the individual pool because the thing is, people see these pools, they think these are monolithic entities, but they're made up of many different miners around the world. Like you could be a miner in New Hampshire and you could be mining with Antpool in China. You know, that doesn't mean that all the miners are over in China.
Yeah, exactly.
But they don't have, as a pool user, you don't have any control of like what transactions go into the block, building the blocks and stuff like that. The pool operator has control. So there's like a soft check there that the miners can leave the pools if they think the pool operator is misbehaving, but it's a very soft check, and they can only do it after the miners misbehave, after the pools misbehave, the pool operators. With Better Hash, the actual miners get to construct the blocks and choose how that works. So it takes out a ton of power from the actual pool operators.
Yeah, so right now the pool operator serves two functions, like you said, the block construction, the block template. They decide how it's templated, and then they divvy up the reward once blocks are mined, commensurate with hash rate contributed. Better Hash, yes, would separate those two functions where individual miners would be able to construct a block template and decide how their blocks are templated, and then all the pool operator, would do is divvy up the reward.
Yeah, there's no way you can distribute that aspect because that's actually like the pool operator is measuring how much hash you're contributing to his pool to divvy that out in the first place.
Yes. So this is one thing as Bitcoiners that I would argue we should be pushing for is Better Hash. I don't want to say a con of Better Hash, but one hurdle that needs to be overcome is that if you are an individual miner, you will have to run your own your own node at home on top of your mining node to sort of dictate the block template. So apparently right now miners aren't doing that too well. So there's definitely going to be better UX at the node level and helping them set them up easier.
Well, it goes hand in hand with all this sexy hardware we've seen lately.
Exactly.
Is like hopefully hopefully multiple people, multiple companies will be making like $600 boxes that a miner just plugs in, like picks his parameters.
Exactly.
And it just handles everything for him, is always on. He doesn't have to worry about it. He just puts it in his farm, and it's just, he's got 400 ASICs all hooked up, he can have a $600 computer right next to it to manage them. Right?
Exactly.
Like it's not that big. It's not, it's more of a, I think it's a smaller hurdle than most hurdles that we face in Bitcoin.
But a hurdle nonetheless.
Yeah, and I think that what motivates it, going back to the previous thing, right, is what would really motivate Better Hash is if we have another, big mining pool act out. Like, you need people's livelihoods. Otherwise, the miners will just be apathetic and they won't switch to Better Hash.
Exactly.
So it all goes back to
to
people's livelihoods need to be at risk.
Yeah. So, again, maybe miners will be apathetic until need be.
Which isn't the worst case. If they continue to be apathetic, it means that none of the pools acted out of line.
Well, there is one thing to take into consideration with Better Hash. I do believe there is a short window of time in which it can be implemented because it is basically a carrot on the stick problem with the stick getting longer as hash rate grows. So the faster hash rate grows and the larger hash rate becomes harder to sort of bootstrap a pool with enough hash rate to make a dent. And create like a payout variance that's profitable for individual miners.
Well, yeah, because you need for Better Hash to be actually effective on a network-wide level, you need the highest percentage of miners possible, right?
Yes. Well, not even that. Just to bootstrap it to entice miners to join the pool, you'd have to have a significant amount of hash power, say 3 to 5%, to make sure the payout variance is so that miners are remaining profitable or at least aren't losing too much money.
Right. So to expound on variance, what that means is technically it doesn't matter how big your pool is. Everyone should get paid the same amount. But if your pool is larger, you get paid out more frequently. And because ASICs have a set lifetime where they start becoming obsolete really quickly, if you don't get paid out quickly, you end up losing a ton of money because your miner goes outdated before you get your income back. So miners want to get paid as often as possible, and the bigger the pool, the more often you get paid.
Exactly.
So if we only have Better Hash on pools that aren't paying you out that often, then you end up in a situation where no one wants to use that pool.
Yeah, so I would argue there's a bit of urgency here if we want to lock down this form of decentralization in BetterHash.
But I mean, like, alternatively, like, people thought Slush Pool couldn't come back because they had too little amount, right? But we had all the scaling wars and everything happening.
I would argue this is
And
completely different, though, because you have to...
people seeded it, though, right? People were like, I'll take a hit because I'm ideologically motivated. My livelihood's at risk. I don't want Bitcoin to get attacked, so I'm going to join this friendly pool and try and boost...
Yeah, but again, there's a whole mental rewiring behind, like, using BetterHash as opposed to Stratum. Like, everybody just uses Stratum right now. It's
super simple. Stratum is super simple. It's just one line.
Yeah.
On your miner config.
So there's definitely an education gap there, and again, I would stress maybe a little bit of urgency needed. So let's get the message out there. Push for BetterHash. SegWit FUD. You put this on there. You want to handle this? Intro this?
Oh, I thought I removed it. I didn't want to give them publicity.
Okay.
They're just the same. They've been fudding SegWit for 2 years now. I have all my Bitcoin and SegWit addresses. They should just, either put up or shut up. Like, steal my money. There's more money in SegWit addresses than ever before, and it's just it's a crock of bullshit.
I'm skeptical until proven otherwise.
Exactly, as you should be.
Kraken compliance report. So Kraken came out with a compliance report and basically proved that in the U.S. in particular, the financial burden and time burden it takes to put up with the legal fees needed to comply with regulations is a hefty part of their balance sheet. So that was something elusive. We'll link to that. Matt, do you want to expound upon this at all?
This was crazy. I mean, we all kind of knew this was happening, but it's nice. Well, first of all, Jesse Powell's a badass, the CEO of Kraken.
The anti-Brian Armstrong.
So part of his point was, like, this is why U.S. customers are blocked from so many Bitcoin services. Like, BitMEX blocks U.S. customers. HODL HODL blocks U.S. customers. And it's because they don't want to deal with this compliance hurdle. Mm-hmm. And so he posted this. These charts they posted is crazy. 315 requests from the U.S. this year, last year, and the next biggest one was UK at 61, and then after that it just drops off. Who's DE? Denmark. They're at 34. But anyway, the U.S. is at 315.
Maybe Deutschland.
They have the FBI. They have the U.S. Secret Service there asking for stuff. The Department of Justice. The IRS, obviously. The SEC. They're getting requests left and right. And they're supposedly like super broad requests. And they're just fishing. They're on fishing expeditions. And these exchanges are perfect targets because they have all the user information. They have to do the KYC. And so they know everything about you. They know where you're sending the transactions and everything.
What does this say about the land of the free? Like, I don't want to sound like a hard ass here, but like, how free are we as Americans right now? Like, if you were the land of the free and a Bitcoin exchange, like, what did you say? The U.S. had 361 requests?
315.
315. The next country was 50. So you have a 6x amount of ass.
And it was the UK. The UK is not great about this shit, right?
Yeah.
They're number 2 at 61.
It's perplexing.
It's kind of like an emperor has no clothes moment, right? Is because you see it point blank. Like, as an American, I am disadvantaged in the Bitcoin space, right?
Yeah, but and I haven't said this on this pod in a while, but it's like frogs boiling in water. Like, these are little...
It's the apathy all over again,
exactly.
Right? That's the
exactly.
theme of the pod.
This is the theme of today's pod is apathy. Like that, I would argue that should shock people.
The other big thing is in 2017 in 2016 they had 71 requests worldwide. In 2017 they had 160 requests, and in 2018 they had 475 requests. So it's accelerating as the price goes up naturally.
Interesting. Yes, we'll be following that. Shout out to Kraken. And Kraken, I think they said they fight these requests as ardently as possible to protect their users' privacy.
Yeah, they try their best, but they have U.S. banking relationships. So I imagine they comply with most of them.
Yeah.
And then the other thing is this is another perfect example of why privacy is so important, and using the privacy tools we have at our availability right now, which the main one that's user-friendly is Wasabi. So, if you're a Kraken user, if you're an exchange user, when you buy Bitcoin on an exchange and transfer it out to your address, the exchange knows that address, and they can use that information to then figure out all your other transactions that happen after that fact. So if you use something like Wasabi, you can help break that blockchain trail, so it makes it way more difficult for them to track it. And so like, I don't care if Cash App knows where my transactions are going. Well, I do care, but I'm saying, like, thought experiment, I don't care about that. Yeah, but they have to comply with government requests and stuff, so you never know where this information's going. They suck at security, the government, so like, all of that information can get in the wrong hands. Then you have some criminal knows exactly how much Bitcoin you have, what transactions you make. Like, that's a huge issue. So you have to, if you don't care about your privacy, like, no one else will. And I think people should use Wasabi as a middle ground in between the exchange and whatever wallet they're storing in, whether that's a hardware wallet, cold storage, hot wallet, whatever.
Yeah, completely concur with that line of thinking. And then once that happens, if you want to take it a step further and take your personal sovereignty to the next level, recommend checking out the Nodl. Nodl.it. They just sent us a free node. It came to your house. I haven't seen it yet. How's it looking?
It's a pretty sexy piece of hardware. They did send it to us for free, so disclosure. Our integrity is not for sale. We will be just as hard on. We're going to be more hard on them than we usually are on most things. I'm very excited. It's been a very promising project. I really like the team there. I become friends with them, and so we're going to run it through its paces. I'm actually going away. I'm going to be recording remotely for the next podcast, which is one of the good reasons I bought that nice mic, so you guys can hear us well. And when I get back, we're going to give you a nice full rundown review. And our plan is actually it's like maybe we'll use this as the TFTC node,
Yeah, no, that's the vision I have in mind.
The cool thing about the Nodl is it runs BTC Pay server, runs all these other things in addition to Lightning and Bitcoin.
I think it comes with Wasabi too, right?
It might be the plan. I'm not sure if it's there yet. Anyway, I haven't run through the paces yet, right? So
Yeah.
we'll talk about all this, but shout out to them for sending it to us. They sent us 40 stickers. We got 21 Genesis block stickers, which is a nice touch. There's
Very sexy sticker.
There's a Genesis block sticker on the side of it.
They gave us some yellow vests. We have some yellow vests here in the States if we ever want to incite some protests in the streets.
Yeah, Marty met them when he was in Paris.
Yeah,
Shout out. They gave us yellow vests that say Nodl.it on it.
If you want to talk about a team that is true to the ethos and the core of Bitcoin, the Nodl team, from what I can glean from I don't know if they're trying to dupe us.
They're badasses.
I don't think they are, but
I don't think they are.
Their intentions are pure in my mind.
But don't trust verify.
Exactly, and they would tell you that. They were actually saying that. Like, has anybody ever? They were like asking me, has anybody ever audited Wasabi? I was like, I don't know.
But the package was actually really funny because it doesn't say don't trust verify. It says don't trust ver, which I thought was a nice little homage.
Yeah, so that's Nodl.it, and we're going to pause here for an ad. A mid-read. This is an ad I think you freaks are going to like. Justin Moon, he's been on this podcast, episode 53, I believe. His Biddle Bootcamp. They're starting another class, I believe the 21st. So it's an online Bitcoin programming course. If you guys have listened to Justin's episode, you've definitely learned a lot about it. He's iterated on it. It's been getting bigger, teaching a lot of people. This next course, what they're going to focus on, first, you're going to build a miniature implementation of Bitcoin and Python with all the major features, peer-to-peer networking, Nakamoto consensus, monetary policy, and more. Deploy the network along with your classmates. Build some simple infrastructure for it in exchange in a mining pool, and practice attacking it. Second, program the real Bitcoin peer-to-peer network, connect to your peers, send and receive messages, write a crawler that can visit every public node in the network, implement naive headers first initial block download, and build a basic SPV client. And then third, you're going to build a hardware wallet with MicroPython firmware, just like Trezor, generate seed words, create HD wallets, construct and sign transactions, and lastly, build a project of your own choosing. Justin, that was a mouthful of a read that I did not look over before I read it. But
he's clearly not a marketer.
He's not, but the course sounds incredible. If you guys are developers out there, it's a remote course. It starts January 21st, and it will repeat monthly throughout 2019. So completion of an introductory Python programming course is the only prerequisite. Visit biddlebootcamp.com to learn more. That's BIDLBOOTCAMP.com. Biddle Bootcamp. The D and the L are switched.
Like HODL.
Like HODL. Shout out Justin. Check out that episode if you haven't.
Yeah, you had Justin on the pod as well. That was an epic. That was an epic.
That was a drunk one. We went on
You
for like
guys
2.5
got
hours.
fucked up. I was so jealous. You never get that drunk with me, Marty.
Well, we need to do like an outside the rabbit hole recap, if you will.
There you go. Marty told me that he wasn't going to drink today, but nevertheless, he's drinking with me right now. So cheers to that.
Don't tell me esposa. Yeah. So shout out Nodl. And we're going to keep giving shout-outs. Shout-out to Satoshi's Place. We put up an ad. So Satoshi's Place, holding my hand up here, didn't make my first Lightning transaction until a couple weeks ago. First transaction was some graffiti on Satoshi's Place, and it was Tales from the Crypt. Billboard, a little ad there. Thought it was cool. Cost me like 40 cents. And I was just proud to see that it stayed up there for a week without being bastardized with any
still
dicks.
Up, right?
Has it been
defaced? Do we have a dick on it?
It's been defaced a little bit, but the whole
Wow.
page has been no dicks, just some squiggly lines.
It was pretty impressive because for the longest time it was not only was it not defaced, it was improved on.
Yeah, it's still there.
It's still pretty good.
Yeah,
it's still pretty
still
good.
Visible.
So I mean, not only shout out to Satoshi's Place, shout out to the random freaks out there,
The maintenance freaks.
Yeah, that are maintaining it and improving it, and you know.
Oh wait, we do have a dick on it.
That's bad.
There's a dick coming onto the T.
No, but that's not. It's
coming out of Donald Trump though.
It's technically an adjacent dick that just happens to be slightly overlapping.
Hey.
Hopefully we're not incentivizing people to go draw dicks on our on our little TFTC poster up there, but shout out to whoever's maintaining that. We really appreciate you, and that's why we do this shit. We love you, freaks.
Yeah. And shout out Lightning Koala for making that online graffiti. It is a very steady source of at least one chuckle a day.
A fun little test case for the Lightning Network.
Exactly. It's a great. If you haven't made a Lightning transaction yet and you want to make your first one, highly recommend starting at Satoshi's Place. Satoshi's.place. Bitmain founders rumored to be stepping down. New CEO inbound. Apparently they lost $1.2 billion last year.
You come at the king, you best not miss.
Woo!
In our last episode, I made 2 episodes ago, not the live episode, but our last not live episode, I made the bold prediction that I think Bitmain will be the last 51%, real 51% risk that we have with Bitcoin. And, you know, this is extremely bullish for Bitcoin. They attacked us, and they got caught holding major Bitcoin cash bags. The market turned on them, and as it should. Right?
The Icarus story of crypto. Bitmain will go down as the Icarus of crypto. The first 10 years, I believe. But yeah, shout out to BTC King 555. Is that his?
Yeah, I think that sounds right.
There's some anon.
The leaker guy.
There's some anon leaker on Twitter.
He's probably part of Bilderberg, though.
He might be, or AXA, one of the two. But he's been calling us out. People have been calling him out, but I'm pretty sure he's been pretty accurate up to this point in time.
Some hit or misses, you know.
Yeah.
This is still a rumor, FYI. We're not sure here.
Yeah, we're not sure. This is all speculation.
Still speculation. So
we could have got duped.
Who knows? I mean, I think it's a Chinese newspaper broke it, so maybe their source is BTC King. You never know. We
shall find out. Only time will tell. We'll see if that IPO ever gets off the ground.
Oh, but Bitmain did lay off a shit ton of people, so we know they're hurting. Their IPO has been stalled. They're definitely hurting. That is not a rumor. The question is, did the two founders, Jihan and Zhao? Zhao's the other guy. He's less. He actually owns more of the company, but he's less public.
Zhan.
Yes. They're supposedly stepping down.
Yes. Well, speaking of layoffs, we talk about market sentiment and where we are, maybe in this bear market. A lot of layoffs. ShapeShift had around the layoffs.
37 people they fired, which is about 30% of their staff.
Yeah, and they had and that was due to I think they released the numbers after they instituted KYC. Their volume just plummeted. So
they didn't. They actually have the numbers on their website for the 24-hour. I mean, you can see it all on the respective blockchains as well. They didn't blame it all on KYC. A lot of people are saying, you know, they're a multi-coin business, so they get hurt more in bear markets, multi-coin businesses rather than Bitcoin-focused slow businesses that are like slow and steady bootstrap type of businesses. But KYC is the real hurdle here. The whole value prop of ShapeShift was they took no information from you, and it was relatively frictionless. You know, it was just super simple and relatively fast to use. You didn't have to have an account or anything like that. The second they implemented KYC, there's all these competitors that don't. And, you know, we saw BISC get huge volumes.
BISC Changely was one for a little bit. I think they implemented KYC since.
No, they have quasi KYC. Like if you send a large amount of Monero, they might hold your funds and KYC you at that point, which is almost even worse. But then you have smaller competitors. Like one is like FlipMe, FLYP.me. They don't require KYC. Like these little companies that pop up with non-founders are like way easier for them to, you know, skirt these laws. And ShapeShift really can. I don't think they can ever, unless they do like a full-on pivot to a completely different business. Like their core business is dead. Like with KYC, it's useless. It's like absolutely, like some people will still use it, but the majority of the users are never coming back.
Yeah, that's interesting.
And they had no choice. Like they
I
were
mean,
forced to bend the knee. Like Eric Voorhees has always been a staunch anti-government libertarian.
That's a crazy thing. Is like he's had to.
So you know they put his livelihood at risk.
Yeah.
They were like, "We're gonna fuck you," and like he had no choice. Like so, I'm not angry at Eric.
No.
His other option was probably lose everything and end up in jail.
Yeah.
But you know, maybe you should just close it all down because there's just no point. And just cut your losses. He has shareholders and stuff. People say you have shareholder, you know, fiduciary duty to them to act in their best interest. And you know, shutting it down wouldn't be in their. I think actually shutting it down might be in their best interest. Just liquidate it all. Pay him out, and you know maybe start fresh on something new.
Yeah, and Eric's a very good writer. That actually, the post that he wrote announcing it was very eloquent, and maybe he could contribute more to like Bitcoin, like writing about Bitcoin and stuff like that. I don't know.
I think that ship has sailed, but we'll see.
Well, we shall see. But again, staying on the layoff theme and where we are in capitulation, I think we've talked about in the past, but Consensus had massive layoffs as well. They're cut down. I bring them up, though, just to segue to the Constantinople hard fork and what Ethereum's going to do.
Consensus with a Y, the Ethereum juggernaut,
yes.
led by Joe Lubin.
Yes. So they had layoffs. They've consolidated. And actually, we can talk about one of their portfolio companies. Infura was in the news today. They run a lot of the Ethereum nodes that are run on the Ethereum network are run via Infura via AWS. So a very centralizing factor, I would argue.
Both on the AWS side and on the Infura side. And
yes.
Infura is based in Brooklyn. AWS is based in Seattle or whatever.
Yeah, so you go into the nitty-gritty. You go into the nitty-gritty details. You're better at this stuff than me.
I mean, the whole value prop of all this stuff is quasi-legal, right? Censorship resistance. That's why you're using it in the first place. Mm-hmm. The reason a prediction market doesn't exist where you can bet on U.S. elections is because they're illegal. So if you have these central points of failure, specifically if they're based in the United States, then when you put that into your threat model, like that's ridiculous. Like literally they just have to pressure Joe Lubin. Like Joe Lubin gets off a plane and they like bring him somewhere and they're like, dude, like,
or Jeff Bezos,
you got to shut down. Yeah, or maybe that's why he got divorced. You know, maybe they were like, you got to stop running the Infura nodes.
Honey, I don't like it. It's hurting the environment.
They got into a fight about it. She was a maximalist, and she was like, no, you can't do that.
She's, from married to the richest man to the richest woman in the world.
But they both, like, people should give her a little bit more credit. Like, they launched together and stuff.
That's true.
But, and she's, like, really smart as well.
Yeah, anyway, I don't know much about the relationship.
Yeah, I mean, neither do I. He had a really good commencement speech. I forgot what his alma mater is, and I watched the commencement speech, like, 4 years ago, and he talks about how he started the company. I mean, we're kind of going on a tangent, but he started the company.
I like tangents.
And they both went to like Stanford or wherever he went. I think they went together. Then they were both in finance, and they both left their nice paying finance jobs to start an online bookstore, and everyone thought they were crazy. You know, and they like kind of, you know, not necessarily bootstrapped it, but like they like worked their asses off in the beginning. So like in a lot of ways they were very much partners. So, you know, you shouldn't discount people. I'm not accusing you, but people a lot are saying like, oh, now she's taking half of his net worth, you know, like they built it together. But anyway,
thanks for that history lesson, Matt. I did not know that.
Yeah, I was talking about it yesterday. But yeah, the commencement speech is really good. Maybe we'll link to it in the show notes. Maybe we won't. But if you just search Jeff Bezos commencement speech in YouTube, really, really good commencement speech.
And
I like commencement speeches. They're pretty good.
I do.
The good ones.
I didn't like mine, but
I didn't like mine either, but I like other people's commencement speeches because you get to pick and choose, right? Like there's like probably like 8 to 12 really good commencement speeches. Those are awesome.
Yeah, and whether or not you have good or bad things to say about Amazon, they're a perfect example of low time preference, getting shit done, being patient, and just waiting for the market to accrue around it. So, very good case study for Bitcoiners who are expecting a technology to take decades to come to fruition.
And the other thing is, so like back to the central point of failure. Let's go back to Infura. You know, AWS won't host Gab, right?
Mm-hmm.
Bang. You know, there you go. Proof. So that's an issue. It's a major issue. Not only do they control presumably the majority of the nodes. Now, we're not even just saying that. The Infura CEO brags about it. And not only do they control the majority of nodes, the main nodes, the ones that like MetaMask and all the major dApps use, are almost all in Infura. So, you know, that's part of the reason why not only does Lubin presumably own a large percent of Ethereum and have investments in many of the companies that dominate the Ethereum space, one of those companies is Infura, and they control a ton of nodes. So this is a huge, not only central point of failure, but he has massive control over the direction Ethereum decides to take, right?
Yeah, the whole ecosystem. And I got a peek into their transition to ETH 2.0, and my God, I'm interested to see how it goes.
Yeah, I mean, that I think is too far off. It's important not to start speculating on far things for Ethereum because they just change their mind every 4 months, and then they like scream at us and they're like, but you didn't see the new thing we're doing instead? You're like, do you not follow it? It's like, it's ridiculous. How am I supposed to follow it? Like, you shouldn't be. Miners and users and business owners need to make long-term financial decisions. You can't just keep changing what's going to happen.
Stop speaking nonsense, Matthew.
And that's a good transition to the progPow fork.
Well, wait, we're not done there.
We're not done with Constantinople yet.
No, we're not.
Not done with Infura yet?
Well, yeah, well, okay. I blanked there for a little bit, but yes, we'll end Infura on a point of objectivity. Let's be objective here. Apparently, they're working on ways of decentralizing Infura, and there are decentralized alternatives that Ethereum enthusiasts are suggesting. So definitely seek those out if you're running an app through Infura.
I don't think they're necessary. The idea is that other companies should offer Infura-like services. So if you take down one of them, and they'll be located in different areas. Like, it's not like someone figured out how to do it.
They're all holding the same data.
Right, but it's not like if you had like a company in Slovenia that also ran Ethereum full nodes for people, then you need the Slovenian government to go after them and the U.S. government. So it's not like there's like this new technology where they figured out how to decentralize that, right?
No.
And like from Infura's point of view, like, okay, maybe we won't run it all in AWS. Maybe we'll run it, some of it in just a different server company, right?
Yeah.
Like we'll run some of it on Azure or whatever. I don't know.
Yeah, interesting. So we'll be following that and transition to Constantinople.
So Constantinople, was that the 15th or the 16th or
16th,
something?
I believe. 16th is the estimate right now. It depends on block time.
Yeah, so that's like the upcoming Ethereum fork. They're going to slash miner rewards. I think they're like fudging with the difficulty bomb or something.
Yeah, they're pushing it back a little bit more.
Yeah,
Again.
Yeah, so the difficulty bomb is like the idea is that if you don't get rid of it, like it becomes completely unprofitable to mine blocks, so like forces miners into forking and like creates a fork incentive where you not continue the main chain. I think it's like a pretty useless mechanism because in any kind of situation where you actually like hit up on that difficulty block, like difficulty bomb, miners will just fork out the difficulty bomb. It's like the easiest consensus ever.
Yeah, and
that's their business. Is like why would they just sit there? They were obviously just fork it out. So it just creates this like forced attack vector type. When you have a hard fork, there's attack vector.
Exactly, there. And it not only a forced attack vector, but a forced precedent that you set by pushing it back. You just basically set a precedent like, hey, we're willing to change this on a whim. Just from a an initial design perspective, that makes no sense to me.
So they decided on the 33% decrease in block reward, I think like 5 months ago or 6 months ago or something.
Yeah, last fall.
So like imagine like you're a miner and you spent all this money securing the Ethereum network. You know, you're not doing it out of the goodness of your heart. You're doing it to make money. But you're also kind of doing it because you're ideologically motivated. You know, most of these miners are ideologically motivated. And then they just like pull the rug out from under you. They're like, oh, we want to transition to proof of stake, so we're just going to lower your reward. You know, like that's a little bit ridiculous. Like every time you fuck with miners, like they're less likely to invest more in protecting your network. And like don't bite the hand that feeds you, right?
Yeah. And so that's just one aspect of it. So that's the first aspect, is the cut in block reward. The second aspect is, I believe it's 6 months after Constantinople did January 16th hard fork, they're going to institute, what is it,
progPow separate.
Yeah, it's completely separate. But it does hinder miners as well that are making investments.
So progPow, they announced like 2 weeks ago or something like that?
Recently.
progPow is basically, just to sum it up, is they want to fork out ASICs, you know, similar to what Monero did, kind of similar to what SIA did. I don't know if you remember our Rabbit Hole recap episodes.
They're impossible to forget.
I got obsessed with SIA, forking them out. I thought this debate was over. ASICs are super important. They enhance the loose game theory that secures these networks, because the hardware becomes that if you have hardware that's specific to your chain, attacking the network renders that hardware either worth less or completely worthless. So it makes the attack way more difficult. And if you don't have general purpose hardware, it's way harder to acquire large amounts of it to attack. Mm-hmm. So people should embrace ASICs. I have a great thread on that. I actually said today, I was like, I feel like Ethereum stakeholders should pay me for all this free advice I give them. Like, maybe I should just shut up and just let them fuck up their network even more, so it just comes to an end quicker. But I like highlighting this stuff because I think it's important case studies for Bitcoin. This is it's a really good tangent for like ETC Ethereum Classic got 51% attacked.
We haven't talked about this yet. Jump into that.
And
well, they didn't. They got what is it? Cascade attacked.
No. It looks like they got.
Did they get both? They got attacked both ways?
The Ethereum developer community
they don't even know.
Is so small and like so non-existent that they can't even give any definitive answers around
Ethereum Classic.
Yeah, it's just like. But anyway, Ethereum Classic uses the same mining algorithm as Ethereum, Ethash. So Ethereum ASICs can mine Ethereum Classic, and GPUs can as well. That created a situation where Ethereum Classic is super easy to attack. So this is it's like a warning sign for what Ethereum might face if they fork out their ASICs, because then you only have GPUs mining, and
which are easier to attain.
Yeah, and then once you use the general purpose hardware to attack Ethereum, you can just switch to a rival chain that uses it, and your hardware isn't
bricked.
Yeah, your hardware isn't bricked.
Yeah. Yeah. So, and there was a miner in particular. I forget who it was. Sorry for this fact slipping my mind right now. But they basically came out and said, "Hey, I just put a multi-million-dollar
$4 million. It was Lindsay, I think, or something. Linz High.
Yeah, something like that.
I don't know how to pronounce it.
But it basically came out and said, "Hey, like, are you ever going to have a discussion with us? Like, I just spent $4 million to come protect your network, and I'm going to be bricked in 6 months."
Specifically, they spent $4 million to develop a new Ethash ASIC.
Yes.
And now that Ethash ASIC might not be worth anything if progPow gets implemented. And like I personally, one of the speculations I have is that, you know, ETC has been super cheap to attack for a long time, and it looks like we had a preliminary report out of a Chinese company that I guess their business model is they track these chains and they issue warnings to exchanges to give them a heads up, like, looks like there's an attack going on Ethereum Classic. And they released a report, and it looks like all the attacks failed to actually steal any money. So the way you would steal money from these exchanges is you send them Ethereum Classic, then you exchange it for like a token for a Bitcoin or another coin, and then you withdraw the Bitcoin and the other coin, and then as soon as that happens, you as soon as that happens, you reorg the Ethereum Classic chain, so that original deposit never happened. You get basically free money. That's how the attack happens, and it looks like none of the exchanges actually lost any money from it. So maybe one of my speculations is that Ethereum is Ethereum stakeholders are attacking Ethereum Classic to try and dissuade miners like Lindsay that created these ASICs from switching over to ETC because they have the same mining algorithm. Like when that happens,
We got a hot Matt Odell theory right now.
but I think that is a misnomer anyway. Like that's a bad even if that's the reason they did it, that's dumb because Ethereum miners that are against this progPow change to fork out ASICs would be more likely to just not follow the progPow fork and continue mining the regular Ethereum chain. Maybe fork out the difficulty bomb because that'd be the super easy consensus. Like, why would they switch to ETC? ETC is a dead chain. It's trending long-term to zero. The only reason we're talking about ETC right now is because it's a really good case study on POW assumptions and, like, you know, what you should know about it.
Yeah, can we give play devil's advocate here? Give a pro of prog POW.
No, there's no pro. You just embrace ASICs. I mean, their argument is that if we get rid of the ASICs now, that when we switch to proof of stake, it'll be less likely the miners revolt at that point. They won't be as powerful.
Yeah, they're playing.
It's a dumb argument. You should just embrace ASICs.
Again, I've said this for a while. Ethereum is the epitome of Gall's law. They started with a system based out of complexity, and it is impossible, I would argue, and many others would argue, to get to a steady state system when you start so complex out of the box. We're hour and 6 minutes in here. It's a long rip.
Are we really?
Yeah.
Wow.
We got one more topic left. Or did we already talk about the Monero ransom?
No, we didn't.
Oh, yeah. So in Norway, there's a bunch of kidnappers holding, I believe, some high prominent person's wife hostage for Monero.
$10 million.
$10 million. There's some conspiracy theories out there that these are just Monero holders looking to get an exit pump in.
That's what I like. I like that theory. That's the only reason I put it in there.
Let's not forget there's somebody who's been kidnapped.
I know, but it would be the first time that it was like a kidnap pump.
Yeah.
You know, because so the argument is that you can't really, you know, the idea is that Monero is relatively anonymous, so you can easily take that ransom and spend it. But $10 million worth of Monero is a large amount of the supply.
Yeah.
So like it'd be really hard to hide that amount. So someone speculated that maybe they already hold Monero and they just want the news to pump it. Which I just thought was interesting to note. But cryptocurrency ransoms will be more likely, whether that's in Bitcoin or Monero or anything else, because it's just the ideal ransom. And this is another perfect example where people say like, oh, Bitcoin holders are more at risk for kidnappings. Maybe in the beginning, but it's getting to the point where it doesn't matter if you own cryptocurrency. The people doing the ransom just assume that you can get your hands on $10 million worth of Monero or Bitcoin. So it doesn't matter. Just all rich people are going to be more likely to get kidnapped because we have like a really great ransom money now.
This is a beautiful future you're envisioning here.
It is what it is. When you have better money, you know, that's what happens.
We'll see. We'll see how it plays out. Hopefully it's more peaceful. I'm hoping. I'm optimistic. Yeah, it was a great rip. I think we covered a lot there. It's great to be back in person, one-on-one. It was a little nerve-wracking last week. I haven't spoken in front of a group ever like that.
Yeah, I was both nervous and excited. I think it came out pretty well, all things considered. It was a fun night.
Yeah, no, crowd was very involved. Shout out to Jay and Aaron from the Coin Talk, excuse me. They had a very interesting open talking about Satoshi and particularly the writings of Satoshi and trying to break that down. Fascinating stuff. So definitely go check that out as well. Shout out to Iterative for putting that together. Shout out to our sponsors, BlockFi and the Biddle Bootcamp. And Matt's got more to say.
I actually had my first ever sober podcast with Pete McCormick on what Bitcoin did, which you guys should check out.
Very good. I listened to it while I was in bed suffering from food poisoning. And it was very good. He sat
I'm
down.
honored. I'm honored.
You, Peter, and Neil Woodfine was on that episode.
Neil's great. We had a great chat. It was a really good time. We talked about what we were hoping for in store for 2019. You had a very similar pod with Pete before that. People should check out. The other thing is, I'm pretty sure it's not only was it my first sober pod, I'm pretty sure it was Pete's first explicit pod. Because even though I was sober, I still dropped a couple F-bombs, a couple shits.
We have yet to have an explicit podcast on the iTunes store to date. So
we don't mark any of ours explicit?
Not yet.
So please don't report us, guys. That would be fucked up.
All you haters out there, if you're looking for an attack
I didn't even
vector.
mean to. I cursed while I said that.
Yeah, no, it was a great week. Thank you, freaks, for joining us. If you like what we're talking about, please rate, share, subscribe. Trying to blow this up. We got big plans for 2019. We're going to take this to the next level. Appreciate you guys for staying along. Again, thank you guys for coming out who did last week here in New York. Peace and love.
R.I.P. Hal. Long live Bitcoin.
R.I.P. Hal. Can't wait to unfreeze your ass.